and grow from it. That's the only thing that makes it okay. Ladies and gentlemen, keep calm. Making money in the market is actually not that difficult, and it has nothing to do with your entries and exits. It actually has to do with your tier size. We're going to talk about how you could take advantage of the current market condition. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. What an amazing week for the open house. I've discovered a new strategy. The new strategy is quite phenomenal. I'm trying to think of a name for it, and I think I'm going to call it the 100%er because that is usually my first target is to make 100% of your money on the trade. And the scary thing is how high we're batting going long in a down market. I'm going to show you that. Not only that, I'm going to show you how you could actually keep calm, tear down in this market, and make money. But first, I want to show you this strategy, and it's something proprietary that I'm creating right now, and we're sort of beta testing it in the room. And the first time we did it was literally on stamps right before the report to hold it into the report. So this is the first time we did it. I think we were calling out stamps over here when it was in like I think the $94, $95 range to go ahead and take $115 calls. We were calling them out at about $1.30, $1.40, and the very next day they were worth what, 40 bucks, 35, 40 bucks. So yeah, $1.30 to 35, 40 bucks is more than 100%. It's more like, 3,000% or 2,500%. But the general idea is to make 100%. Then what we did was the very next day on stamps, on February 21st, right over here, where you see this little red doji, we went ahead and we started buying $170 calls for next week. It was a Friday, 10:30 a.m. So we bought next week's calls. I think I ended up paying, was it like $1.45 per call for 170 calls? I sold most of my position after making 100%. It went up. The calls were up 300%. I sold the rest, and then throughout the day, the calls went up 1,000%. Now, Stamps had no news on Friday, and the stock kept running up. And as a matter of fact, on Friday, the market was showing us no love and just going straight down. As you could see on the cues, you could use the spiders as an example. And then what we did was yesterday at the right before the end of the day, we bought Domino's Pizza 300. We took the 380 calls. Yeah, I think we took the 380 calls and we paid, what did I end up paying? $1.60? $1.65? I have it written down somewhere. Point is, doesn't matter to the penny what I paid. We're doing it in a live setting and everybody could see my live orders go through. And in the print box, you literally see to the second where I get filled. And what happened today in Domino's Pizza is our calls absolutely exploded. Again, with absolutely no news. And in the morning, our calls shot up right here. We were up 100%. Stupidly, I'm thinking the stock is going to break $374. I don't take it. It pulls down. I think they pulled down. My calls were printing like 95 cents. So I was down money on my option contracts. And then what happened after 10:30 was I would call it miraculous if I didn't see it twice in a row over the past 2 days. Then on Domino's Pizza, it just ran like this, all the way up to almost $380. My best sale, I think I caught like 275%. on these options. And again, the first target is always a double. I sold it better than that, obviously, but the first target is always a double. And the beautiful thing about this Domino's pizza is the market is showing us absolutely zero love. There's no good news. There was nothing. So what I've been doing is I've been realizing a unique thing that the algorithms have been doing with certain technical setups coinciding with the 5 minute in the daily. And I'm too afraid to say it right now, but it almost doesn't matter what the market is doing. Almost. Because I've seen names like Stamps and Domino's Pizza explode while we're in call positions with absolutely no news flow on the names whatsoever. So I did find that a little interesting. We bought Roku calls here before the end of the day. This was the next one we took. I'm holding it overnight, but I was up money, rather almost instantly. I mean, I paid, let me just look it up because I tweet out actually I have my software up here. Let me just look. I ended up paying $1.47 for $124 calls expiring Friday. And immediately they shot up. They were up like 30% before the end of the day, and I was buying them right by 340, and Roku shot up, and now, it's gapped up beautifully after hours. The point I'm making is, my calls aren't up 100%. Maybe they'll never be up 100%, but that's what I'm aiming for. I paid $1.47. I'm pretty much looking for these calls to go to like 2.94 or whatever, $3 if you want to round it off using a new methodology. This is introducing something new and unique to the Newsbeat Live Room. It allows traders to actually use intraday swing trades that could translate into a potential overnight with a target of practically doubling your money. And I know you guys have been seeing like 300% returns, 1000% returns and stupid things like that, but we're aiming for 100% whether you realize it or not in terms of a return. And yes, I'll usually hold a runner on these, and the runners just keep running, and it's just really an amazing feeling. Not only that, we've been integrating something new here with our Newsbeat earnings ideas. And yesterday was actually kind of funny. I'll bring up, I mean, total, we're rocking and rolling, but let me bring up yesterday. I actually chose 9 names: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. No, I think that was from the day before. So 4, 5, 6, 7, 8. All right. So we had no, that was SPNS. Sorry, it was 9 names. See, I got confused. These 9 names right over here. Hold on. These 9 names right over here. And I lost on 8 of them. See, so I don't only like to just come out and show you everything that's good, but between these 9 names with a $100,000 bet, you would have lost about $9,000, which isn't a lot thanks to being completely bailed out by Tupperware overnight short. And I do want to show you the process of picking certain names that do work overall. And I'm honored to highlight the fact that out of these last 9 names I picked, I'm batting 1 out of 9. I missed 8 out of 9 of the last picks. For tonight and tomorrow, I chose Alarm, Wendy's, and SBGI. At the moment, I think the other two are reporting the next day, but Alarm is looking good for us right now. Stock is up more than $2.50 at the moment, $2.56 at the moment. We'll see where it opens tomorrow, but they announced solid results, and that should be looking good. Now, I'm going to explain to you how to keep calm and how to tear down and keep a large amount of simplicity in your strategy. And what we've been basically doing today, I am telling you, with 70% or better accuracy, I can nail the tops and bottoms of moves in this market. Yeah, yeah. I mean, somebody came to me the other day and said, Mark, I know you always say 70%. I'm following you, and I made 89% of my trades successfully. And they come to me with these crazy high numbers. So, like, for example, today in Home Depot, we went ahead and we bought this thing. And again, please, for whatever reason, don't think like I'm boasting. I'm actually just being logical here. So what I do is I tear down. If you tear down in this market, one of the biggest mistakes that traders could do psychologically in a market that is having very wide ranges is they continue the same strategies they're doing before. They end up getting stopped out and then watching the stock go in their wanted direction. So let me ask you, I'm not saying that never happened to traders, but in the past 2 days, today and yesterday, I could even say Friday because the drop started happening then. In the past three, but let's just talk the past two trading days. How many traders got stopped out consistently, it feels like, or several times, only to watch their position go up money? How many traders did that happen to today or yesterday? That is one of the most common things that traders will be afflicted with in a market that acts the way it does. What I do, my strength in the market is counter trend trading. I find it really ironic when people use the phrase the easier thing to do or the easier direction was shorting in a market like this. How many traders have actually heard those exact words? People say the easier move was in this direction. How many people have actually heard that phrase before where they're like, the easier move is up or down? And I look at them and I'm like, that's not the easier. Yeah, that was the bigger move. There are traders who just trade short when the market keeps going up, and maybe the easier move for them was to the short side. And there are traders like me who went long all day and made very low four figures today. And I've been going, I mean, all right, maybe a put play here or there, but like for the most part, I'm making my money going long today. You might be saying, I'm missing dollars and catching dimes and nickels. I humbly disagree. I humbly disagree. I was calling the bottom of the spiders all day, the Qs all day, certain stocks all day, and nailing them with very small trades. Now, I was taking about 10% of my desired position, meaning if I was taking my normal size position, I'd probably be up about $20,000, maybe more today, but I didn't. Okay? I'm up much less than that. But here's the point. I disagree that I would have been up that much money had I sized up today. You can't just take somebody's P&L and L and add a zero at the end and say if you added a zero at the end of your contract size or share size, you could add another zero to your P&L. Because what happens is you're going to see names whip up and down so much that in an environment like this, you are much safer having a much wider stop, which with much smaller contract size. I'll give you an example. And low four figures, I don't want to sugarcoat it. I'm not even up $2,000. I'm up like, at the moment, my P&L is showing $1,791. So I'm up very small. I mean, there are traders in our room who are making six-figure days on days like today, and I'm not. But I want to show you something. I want to teach you that there are certain market environments that might not be best for you. And maybe you don't need to be the person who is catching, you know, every single short move or sitting there and, oh, I should have held my puts. I disagree with that. Yeah, in hindsight, you would have made money. So let's take Home Depot today. Reported earnings, positive name, flush down right over here, and flush down when it was around 241.80, 241.70s. I went ahead and I bought some calls. I went ahead and I bought, I think it was 10 contracts. I'd have to look up. I'd have to look up the option strike again. It was the 242 and a half calls, and I think I paid. Let's see. God, just annoying. I don't remember. Whatever it was. I bought some Home Depot here when it flushed. And I bought 10 contracts. I got filled on the bid. And when I got filled at the 241.70s, the stock flushed to 241. After I got filled somewhere like right over here on this bar, because it broke the pink and white line, I did 3 videos on this already. Flushed down to 241. I believe my P&L was down with 10 contracts, $200, and I didn't even break a sweat. Now, had I had my full size, let's say I had 100 contracts, I would have to watch my P&L drop $2,000. And on a day like today, that's not going to make me too comfortable. So everybody has a different comfort level. I'm just explaining mine. When I'm down $200, I don't flinch. And then immediately after it goes from 241 to 243.50, I clip out, make sweet money, and move on. Um, then, of course, we had the Domino's Pizza, which we had 380 calls, and I mean, I made well over 100% on this one, and it was just really nice. It was just a really good feeling on Domino's Pizza to watch it go up with the market. But we've been making a lot of easy calls in terms of if you tiered down, the calls were easy to profit on. If you did not tear down, they were difficult. For example, on the spiders today, we called a bottom. Let me just show you the algorithmic trend line. Right over here when it broke 312.68. It basically was going it was going through two levels. 314, it flushed 314 here. It flushed $314 for the first time, just finding out where it did it. Right around here. Flushed down. You could see on the 5-minute translation, hit our trend line here. I'm buying somewhere up here in the calls. I bought them at like, I think it was like the 314 calls at like $4.24, the weekly calls. They're kind of expensive. You know, you have to figure when the spiders are down 10 points, options are very expensive. The stock went a little against me, then popped with me really hard. Went to 314.72. I sold 80% of my position. At that point, I'm holding just 20% of an already light position. As soon as I sold, my thought was spiders are going to get above 315. That's what I was waiting for. At this point, instead, the market dropped right in my face. Went from 314.72 and hit a day low of 312.08. So literally, with a small position, I watched the spiders go against me, $2.64. But the beautiful thing is with option contracts, my calls were down, I don't know, 30 cents approximately. With a $2 drop, my calls dropped 30 cents. So if you're holding common stock, that trade becomes a lot harder because you're watching your shares drop $2.64 in value. And if you're holding options, you're not even blinking. It's not even saying anything. And as it's going down here, all I'm saying to the entire room is the market bottomed. The market bottomed. I'm holding. I'm comfortable being long here. I'm comfortable being long here. After it pops, I'm like, let's see if we could get to 314. Gets to 314. Let's see if it could get to 315. Pops up right over here. It's already 3 o'clock. I have to start spitting out earnings plays to everyone. So I'm like, I have to sell, but I think it's going over 315. So I could just focus on the earnings plays and not have my eyes glued to the spiders. Very next 5-minute bar breaks 315, goes to 315.66. Not only that, we're calling bear flag breakdowns in the spiders as well today, as well as the Qs. We called this short right here. Now we're using the Qs, but it coincided, as you can see, with the same exact chart. So right over here on the Qs, we are like, if you break 220.26, you're going to flush to day lows. So it literally, after we called this short through this candle off this bear flag, and the cute thing is we actually did a video for you recently that teaches you bull and bear flags. If you actually applied what you learned on that video, you could have caught this. And we called this one out, and the spiders plummeted. I mean, it dropped $1.37 in 5 minutes. That's plummeting. Digested back up. We called the next short right over here through 219.41 to hit day lows. Next bar plummeted. See how that works? So we were calling short trades in the spiders and Qs. We were calling long trades. We were calling bounces here in the Qs. We were calling Q bottoms, stock bottoms. And my day is sort of a collaboration of all these little bottom calls working in our favor. Now, there's some people who are going to come to you and say, you know, you're sitting there and you're fighting to make a dime here, a quarter here, 50 cents here, even though they're dollars, you know, technically speaking, when you should have just opened up puts and held, which some traders did today, and they killed it. And I know people are looking at traders like that, saying, I should have done that. I disagree. You want me to prove it to you? You disagree with what I'm saying? Allow me to explain myself. All right. You went ahead and you were short overnight from last week, which a lot of people were, or from yesterday, which a lot of people were here in the room. So a lot of people made a lot more money than me today, right? So you're holding, for example, let's say you're short the spiders. We'll use that one, all right? And you're short the spiders. It opens up at 323.96, drops to 322. You're holding. After it drops to 322, it pops to 323.57. Okay? So immediately the spiders pop $1.50 against you. You don't care. You have all the conviction in the world. Despite the market drop, it's going to drop further. You're right. Spiders plummet all the way to 319.49. Beautiful. You're up huge. You're deciding to hold still. After it goes to 319.49, it pops to 321.27. It pops $1.75 approximately in your face. You decide to hold. You decide to hold watching the spiders go $1.75 against you while you're either short or bought puts. You're right. It plummets again to 317.53. You're still convinced somehow that the spiders are going lower, and it goes from 317.53 back to 319.74. It goes back up $2.25 approximately, rounded off, against you. But you have conviction still. You're holding. Good call. It plummets again, real hard to 312.08. You hold. 10 minutes later, it's at 315.66. It goes $3.50 against you after a beautiful hold and then drops. You want to know the only way you could hold that position? Who knows the answer? For most people, because some people in the room caught it. For 99% of traders, I would say out there. You want to know how you hold a position like that? You could either be light, small position sizing, maybe. Even that would be tough. You have to walk away from your computer and have no stop loss. You have to fall asleep at your desk. You have to have somebody hit you over the head with a golf club. You have to have your power go out and somebody walks by, kicks you in the kneecap, and steals your phone and runs down the block. And you're sitting there in agonizing pain, not knowing what to do. That's how you hold a position like that if you're 97, 98, 99% of traders out there. Then you'll have somebody like me on a day like today who I know what I'm good at, and I'll take the spiders and I'll call the bottom here and scalp it, and I'll call the bottom here and scalp it, and I'll call the bottom here and scalp it. And I'll make my money and I'll do it consistently, but I humbly disagree that there is a blanket statement when you say this is the easy trade or this is the hard trade. The truth is, the trade that you are able to most consistently make money on is not the easy or hard trade, it's the best trade. The fact remains that all trades should be easy. If you have a strategy that works the majority of the time, most of your trades should be easy. I'm not saying they're 100% stress-free, but they should be as stress-free as possible. I'm not saying they're 100% easy, but they should be as easy as possible. I'm not saying you make money every time, but you should make money the vast majority of the time, 70, 80% or more. And I'm not saying that you should go heavy in this environment because when you're whipping through and breaking stops and going like this and whipping down, you know what I did? I just teared down and used no stop whatsoever. No stop? That is silly. The best traders I've ever met in my life do not use stop losses on every single trade. Explain that to me. You think Warren Buffett is trading with stop losses? You think these big fund managers have hard stop losses in place? The reason why Wall Street created these hard stop losses, they'll tell you, is so you always know how much money you're losing. But the problem is that 97% plus of traders lose. So when you think about that astronomically high number, what is wrong? Are all these traders dumb? Do you all have poor risk management? No. You are being fed a system which is not designed for your success. You see, when I buy my little light positions, when I buy my 10 contracts of Home Depot and I drop a couple $1,000 just for numbers' sake, and I drop $2,000, I know I'm not losing more than $2,000, even though I'm not really willing to lose $2,000. It's not like I buy $2,000 worth of contracts on a Tuesday and say, I'm losing $2,000 in the worst case scenario, even if that's true. Logically, I'm going to lose five, six, $700 if things really go wrong on average. And if things go right, I'll make two, three, four, five, six, $700. But the thing is, I'm going to be right so much more often than I'm wrong that in today's market, if you're looking at a major support line and you flush through it real hard, you're better off. Like some people, like I'll buy 1,000 shares and risk 50 cents because I want to risk $500. In a market like this, I would rather have you buy 100 shares and risk $5 on that 100 shares. Because if you were doing that, you would have probably made money on every single one of your trades. And I know what you're already thinking. You're going to come back to me and say, well, I'm not making $5 on any of these trades either, Mark. Short of playing like crazy name like in, Google, Amazon, then maybe. But let's say you're staying away from the $1,000 plus names and the Teslas, and let's say you're staying away from that. But you're not losing $5 on any trade either. And you will be able to set a stop in the future. The problem with most stop losses, the number one issue I see after 21 years of trading, is that traders establish their stop losses before their trade begins. That is the number one mistake you can often do. There are situations where it's not a mistake. I don't want to make a vast, 100% this is no way you should do it. But for most of the trades that traders take, setting a stop loss early is the biggest mistake you can make. Your stop loss should be set shortly after you enter a position. If you're using a 5-minute bar, sometimes within 10 minutes, you should have a good idea of what level you want to see hold. And I know that sounds very counterintuitive, but if you don't, the question I have for you is, why are traders failing under these very rigid, defined systems? You're a human being. You have a brain. You are meant to think. You are meant to assess information as it comes to you in a real time setting. You weren't meant to predict everything. In fact, I want to show you something that will hopefully change your life forever. And sometimes I find these things, sometimes I write them myself. Here we go. I can't explain it better than this. And I tweet out these little gems. Read this. This is this is exactly the way I feel about a trade. You ready? I'll read it for you. And I I tweeted it out 7:47 a.m. this morning before the market started today, ironically. Before I make a trade, I have already worked out responses to meet virtually any conceivable development through contingency planning. And as new unexpected issues present themselves, the contingency plan playbook is expanded, meaning that you don't have your stop right away. You're looking at the market, what happens after you enter, and then the playbook is expanded, and then you put in your stop loss order. Because if you put in your stop loss order in a market like this, and I'm going to enter here, and I'm going to buy through the top of this candle, and if it breaks the bottom of that candle, I'm out. You're going to be out almost every time, virtually always. 80% of the time, you're going to hit a stop loss. Is that the safe way to trade? Ask any money manager, ask any risk manager, ask any educational platform out there. They're going to tell you that you did the right thing. Well, you had your entry, you had your target, and you had your stop. Did they take into account that the market is blowing by every support and resistance level based on elevated volume? Are they basing the fact that you should be tearing down in a market like this so that you can potentially catch a bigger move on a smaller amount and not get your position thrown away when the market drops a little and doesn't go in your desired direction immediately after you buying it? Did they do that for you? No? Oh, I guess I have my answer of why 97% of traders fail. Tear down in this environment, you can still make some money doing it. This is from yesterday morning. We have an open house and a free ebook in the description. You can still sign up for the open house. There are 3 days left. Take advantage. Look at this. Tear down, tear down. If you tear down, not only are you going to be right more often, but you're going to catch bigger moves on your tear down, have virtually very low stress. Your brain might be exhausted from watching a market today, but you're going to make money. You're going to make money. And if you make money in an environment like this, going long today, like I did and so many others did, and yeah, there are a lot of people who went short too. I mean, we have a very large community here. Don't get me wrong, there are a lot of people who went short as well. But, you know, don't think that you have to be the person shorting this environment. So I do want to introduce a new series of Newsbeat trades that will be exclusive for Newsbeat Live members only. They happen intraday. I have no way of communicating with you intraday outside of the Newsbeat Live room and through our Twitter service. But we are going to start beginning to bring you what I like to call, you know, that song that goes 100% ooh, from the back to the whatever. Anyway, that's what it's going to be. We're going to have 100% trade ideas. And I know it sounds like so magical, but really, Domino's Pizza and Stamps. I'm not saying I use stamps.com, and I'm not saying as a New Yorker I would ever order Domino's again unless I'm outside of New York, but it was magical trading the stocks. So we're going to continue to try to bring you we're going to continue to try to bring you these ideas. We're going to continue to try to bring you these 100% ideas. If you're interested in our open house, there are 3 days left, free to join. Link in the description. You just want a free ebook, link in the description for the ebook. You want to reach out to me personally. You want to tell me that I have a face only a mother can love. You want to reach out to me. You want to disagree with me and say, Mark, you are insane. You've been trading 21 years. You have the highest Sharpe ratio I've ever seen. You have the highest consistency ratio I've ever seen, but I think you're a nut job if you're thinking that you don't need to place a stop before, you know, you start a trade. Make that argument with me. I will argue that with an option trade, you can build the stop loss into the trade before the trade even begins without having a hard stop loss in the first place. Anyways, there's a link in the email too. There's my email in the description link in the description. There's my email in the description if you want to have a word with me personally, and I will look at your email and I will respond to you. And if you enjoyed this video, I want to say I enjoyed doing this video for you, as I do enjoy giving you content that does help traders think outside the box. That is the true way towards success. That is the true way. Show love, show compassion, work your work your behind off for the people around you, start a family, care about every trader, care about every person, leave no trader behind mentality, fight for everyone, and that is how you ultimately reach success. I hope you guys enjoyed the Newsbeat show. Happy trading, make money. Mark, the levels. You didn't give us the algo levels. All right. All right. Here you go. Enjoy. Hope you guys enjoyed the Newsbeat show. Happy trading, make money. I'll see you guys tomorrow morning on the Newsbeat live trading broadcast. Free to enter tomorrow. Have a wonderful evening.